All right, let's jump into things. So where we at? 10, 17, 10, 18 now on Wednesday, the 19th of November. Just kind of sort of losing track of the days a little bit at the moment. It's only halfway through the week. Jeez. Um, look, still not a great deal of news to or data and that to sort of report on. One thing I did sort of notice overnight was they sort of snuck this one in, and this is making things inherently difficult at the moment. Just in regards to sort of uh, data catch up, US shutdown sort of coming back, all this sort of kind of stuff and that, because obviously sort of like we've got a big chunk of time in which we had no data. And basically everybody was just moving off sort of Fed speakers and all this kind of stuff, and I'll get to that in a moment. But we didn't have this on the calendar, so you can't sort of plan out for this, and then all of a sudden it just popped up there last night. And again, like these odd sort of times, 10 past 7. Unemployment claims, obviously, it's a US bit of data. Typically, would be coming out, I don't know, with the daylight savings kind of conversion, but probably around 12 o'clock or something, 12:30, 11:30 minimum, kind of thing. So for this to come out just after the start of Euro is an odd sort of place. Same with what we've got on technically Friday morning, but Thursday night. We've got the non-farm payrolls, which typically would be at the end of the week here on what would be the Saturday, sort of local time. So everything's a little bit askew at the moment. You just got to kind of roll with the punches a little bit. But from where we were at prior to the shutdown, uh, anywhere in sort of like the 200 and teens kind of thing, 220s kind of was seen okay, 230s is starting to be a bit, 240s was okay, generally dollar weakness. So we can sort of look at, oh, I get not that one, let's have a look at this one, at sort of where it was previously. Obviously, we had a little bit of a spike up here, but as you can see, the last set of data we're going off is the 25th of September. As I said, it's the 19th of November now, so there's a big chunk of sort of time missing there. So who knows what this actually applies to? Is this an average of the block of time that was there? Source skip data for the last weeks pertains to the week ending. Oh, yeah, look, to be honest, I can't even really give you a definitive answer. But anyway, look, we can go off what the kind of numbers were. 232. Not it's look, it's not sort of drastic, but it's more on the side of a bit more not better for the dollar kind of thing. So 218, two teens, those sort of things. That's generally seen as a little bit better. But take these things with a bit of a grain of salt at the moment. Wait till everything sort of it's just clearing the backlog, getting back to a sort of okay, we've got one number, and then we can base next week or next month off the number that we've got. It's just that we've got this big gaping hole in the data at the moment, where sort of like you come back and you say 232. I mean, like, okay, is that up? Is it down? Like we you know what they were previously. Sort of like so, as you can see, we can look all the way back through all this data here, so we know generally what that kind of number sort of reaction in the market should be, but it's not sort of like okay, is that still like is it it's like sort of like when you get earnings out for a company and that's sort of like, hey, they beat earnings, but they did lower than expectations. Yeah, we don't get expectations for the weekly unemployment claims, but you go off what they had the previous week. See what I mean? And so it's a bit up and on. It's a bit sketchy that they just sort of plug it in there as well. But anyway, apart from that, that was about the only sort of data we had. We had a bunch of Fed speakers, as we always kind of do. As you can see, there was absolutely sort of zero of data or people speaking that through yesterday. But overnight, 2:30 we had Bar speaking, 3 o'clock we had this Barkin speaking. And if you look at the markets, I'll draw back to this in a moment. You see the market sort of dip down, half an hour later, shoot back straight back up. Of course, the night before, we had Waller speaking, and Waller's one of these sort of dissenters, and of course we saw the market dip down and then slowly sort of chew its way all the way back up there as well. So these Fed speakers, I sort of say this all the time in that, but the Fed speakers really are kind of knee-jerk reactions with the market. Like I've never noticed them so much as the last sort of say 6 months or so to have such an impact on the market. But particularly while things have been so up in the air as to sort of obviously the direction of what the Fed's doing. Like, so for instance, like when inflation was through the roof, we kind of knew what they were going to do for the most part. And then when it started to come down, you kind of knew what they were going to do for the most part. But now we're in this sort of position where you got to balance the jobs, you got to balance the inflation. What's the Fed's head like? Sort of, what's their lead mandate? What's at the forefront? What do they want to tackle? Because obviously, the way that a central bank tackles those two issues are completely opposite. They're complete 180s of each other. So you got to sort of be able to ascertain what is at the forefront and what are they going to, how are they sort of going to act, hopefully act accordingly to address whatever the sort of the mandate, the main mandate that they want to tackle is. And this is the thing, because we haven't had this data, don't even really know true level of where CPI is at. Now we're starting to get some bits of data in terms of the jobs. We got ADP uh, last week, I think it was, because obviously ADPs are private. We get NFP this week, but again, it's just a matter of what's the market going to sort of think or do with that kind of stuff. Is it going to have an impact at the moment, or do we have to kind of give ourselves this first set of data to be a baseline, and then subsequent bits of data to then sort of get a broader picture based off that. So yeah, it's an interesting sort of time with the US data. Moving on from that, we've got wage price index. Now, this isn't something typically that I would sort of be looking at. I guess obviously the idea is just sort of like changing business practices, government pay for labour excluding bonuses. So basically, sort of like, is it keeping up with kind of inflation and this kind of stuff? I would assume. Maybe someone can correct me if I'm wrong, but obviously, sort of like, if the prices are going up, if the CPI is going up, cost of living, all this kind of yada yada is going up, if the wages aren't keeping up with that, well, you kind of sort of think, okay, if wages aren't keeping up with that, it's less money for them to spend, less money to sort of be circulated around. You're then going to see maybe retail figures suffer, could then sort of lead to GDP suffering, which is obviously not positive for the economy as a whole. And as that may not be positive for the economy as a whole, that's more in the camp of, okay, what would the central bank do given this specific issue to address that? And that's the camp that you put these bits of data in. And if it comes in weak, well, that's more in the camp of sort of, okay, they probably need to cut. Look, it's not a massive, like as in a top tier bit of data. It's not a CPI. It's not even jobs numbers. Job numbers aren't massive for Aussie. I suppose a little bit the unemployment as well, but it's not something that's going to be, oh my God, wow, did you see the wage price index is down a point, half a point? Like, it's just not going to have the same impact. But it's a piece of the puzzle that you put into one side or the other. And this is how you work with the fundamentals. It's sort of like, you need to build the idea of what would the central bank be more inclined to act upon. Jobs and inflation are the two mandates. And these are the pieces of the puzzle that we put into place with those. Short of that, we have this guy speaking, Logan speaking. I'm not quite sure what time in America this must be, but must be sort of pretty late at night. That sort of thing. I think they're about 10 hours behind or something, aren't they? She said, like, these people are just coming out yapping all the time and that. Look, again, I don't think this will be, it sounds like a lot of think at the moment, but I'm not, put it this way, I'm not basing a lot on the idea that this guy will come out and say something and it'll impact the market a great deal. That's what I got to say there. CPI is the next thing up for UK. So we're seeing a slight little tick down here. Again, look, I don't really trade GBP pairs. It does make up a portion of DXY, so you could sort of see that potentially impacted a little bit, but I wouldn't say like GBP pairs hold enough weight to really impact it, the DXY in that. But, it's just something to be aware of that is coming out. Plus, it's good to see sort of what's the general sort of, not even consensus, but what's the general feel of inflation around the world like, I mean, there's, everybody's going to be a little bit different. But I think sort of like certainly through that whole sort of COVID period and that, you can see that, once trends start happening, as in sort of like, central banks start cutting cycles or hiking cycles, they're generally all vaguely moving in the same direction. And, this is obviously a little bit of a drop down. Well, if inflation is inflation's still high. 3.5 is still high. So like let's be honest with that. You're looking for 2%. 2 to 3% is what they call the band that they were happy to be in. But that's not job done by any means, even if you come in at 3.5%. So you may get a little bit of a blip of sort of maybe pound weakness on that, because obviously sort of inflation isn't the issue, isn't as much of an issue. Well, there's not as much of an argument to hold rates higher, even though it's still above. So there definitely will be. But that's just the general idea. So I wouldn't base a lot on that one there, apart from the fact I'm not trading GBP pairs. Moving forward, not a great deal through here. Euro CPI flat. That's more sort of like what they're looking for in the band. This might be able to impact things a little bit more, but again, it's not something that I'm sort of basing a lot on. We got trade balance. Is this go like what are these little release date delayed 43 day? Okay, so these are just sort of like notation, the little stars in these bits over here, and that sort of saying, okay, boom. So look, trade balance looking to slightly tick up because -78 to -61 is obviously an increase. I wouldn't say enough to sort of again impact the market. There's all just little bits of data to be aware of. 2 o'clock, Mirren talking. So this is the kind of thing that I'm talking about. Mirren's the appointee from, I think he's a Trump appointee, wasn't he? That was really quite very dovish. Really quite. Very dovish. He was the one calling for the 50 base point cuts last time when they got the 25 base point cut. So you can pretty much tell what these guys are going to say. They're going to come out sort of saying, the jobs market's really in shambles and we really need to cut before the curve. We need to cut before we get the really bad numbers because when we get the bad numbers, it's too late. That is what he's going to come out and say. So it's one of these sort of things. The market will react to that, even though everybody knows what he's going to say. It doesn't really change anything. So I use the term landscape changing. This is not landscape changing. This is knee-jerk reaction stuff, and this is why, even though the market knee-jerk reacts to this, it'll generally undo the move soon after, and we've seen this a couple of times this week as well. Fed minutes coming out at 6 a.m. And then you got a speaker there as well. Williams coming out there as well. Plus we got a speaker, and this is what I'm talking about. You got a speaker at 4:45 as well. So these guys are yapping constantly. So I don't think the sort of the Fed, the FOMC minutes are really going to give us much that we haven't heard from all these guys anyway. All right, let's jump onto the charts. I'll start off with Aussie just for fun. This is really filling out this structure to a T. This was the move, yes, last week. We were sort of expecting a move, come up over here, click this here, come down here, flip this over here. So look, I think this is really going to give us our direction once we do get a big breakout of here. Let's get little arrows and bang down this way. This will be a direction out here, or we'll get a direction over here. Now, I am still sort of thinking or planning or trading to the idea of sort of dollar strength into the end of the year. Should we get a close down underneath 64.70s on a daily? So I do think that this is really just a blip up, and I do think this will probably sort of come back down lower over here. 64.20 is a big level that I've been touting for a long time. It's got close a couple of times. But obviously, the buyers are stepping in, But if we look at sort of just basic structure, and you can see this kind of area here, this is the 4 hour that we've been sort of, the last week and a bit, hold, test under, blah, 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 and then bang, crash through. It's now retesting the underside of this zone, puts the emphasis back on this level down over here, particularly on a quick little flip of this 4 hour. Put a little alert underneath that. Should we sort of come back down over here? Look, it's the same deal on the daily. It's held. So should you break down underneath here, it doesn't mean, okay, necessarily, boom, we're going down to 62s or something like this, but you could almost sort of expect a pretty similar sort of price action in the sense of this kind of thing to move down to 64.20s as a test down there. So should we get a close underneath this zone, underneath 64.80, 64.70, obviously deeper down better. But should we get a sort of close down under here, I think that's what you kind of look for. Continuation move down, move up to retest, and then move down to target. So have a look on the 4 hour. Closed underneath here, it held, came underneath but closed above. This candle here broke down, little retest, moved down to target, back up to retest, and now we're looking for a move to sort of see if it can complete and come down over here. Now, it did get this little spike down here, and this is what I was talking about last night, actually. If you have a look at this for the two speakers, this kind of little move here, 230, look on the half hour, you can see it better. So 2:30, you can see the timestamp down the bottom here. 2:30, 3 o'clock. Big move down, big move back up. And we have a look what time were the speakers. Well, here's one speaker at 2:30, one speaker at 3 o'clock. You know what I mean? Like, it's just knee-jerk reaction with the market with these speakers and that. So it's just about being aware of it. It's not like, you know, panic stations or anything like this. It's just, you know, that's just how the market works with it, and that's okay. You can use that to your advantage. But this is a speaker that we had the other night as well, 4 o'clock, 4:30 or whatever. You saw gold and silver absolutely demolished. Aussie demolished. Bang, comes down here. What's it do? Comes up and fills that body, the body fill, and undoes the move from the speaker. This is what I'm talking about. Like, you know, these aren't landscape changing bits of data. It's not like, okay, the Fed have done an emergency cut. Okay, that's landscape. You got to reevaluate. And the big guys I'm really talking about, you know, because they're the ones that are moving the market, need to reevaluate where they price these products at. All we're doing is following the trend. So we could sort of see and act accordingly to it. But anyway, so look, underneath 65, I think sort of, look, it probably opens the door a minimum down to, you know, mid 80s, and then potentially see if we can get a run down underneath there. But with NFP coming up 2 days now, so it's not tonight, it's the next night, this could make things a little bit interesting as well. Now, sort of considering both sides of the coin, if we do break above 65.20, then you're probably looking up to 65.35 as your next sort of target. I do think this will peter out a little bit, but, you know, at the moment it is sort of bouncing along this area up over here. So we'll sort of see how this sort of plays out. But I'm probably looking for US dollar strength, to be honest. All right, and speaking of which, we got DXY. So DXY is, yeah, it's actually holding up quite well, all things sort of considered at the moment. One sec. So if we have a look on, so on a daily, now I sort of changed this channel the other day. So originally, just to keep it updated, I had this as a potential channel coming through here. And I thought, look, you know, from the lows, here's a bounce, pretty much reacted on point here. We broke down here. You know what? I'm going to keep this one in here. Let's make it another color just so it stands out. Put it like this and see how the market reacts to this. I'm not a fan of this. I mean, as I said, that was the channel kind of like that, right? So I was thinking kind of pretty good, reasonable enough 2 touches here, 3 touches here. That's not too bad. Breakdown, and then now it's coming up here. If that red line or that red channel were to be the place, you could say, okay, look, it's retesting the underside and we got some downside. So there's an argument for the downside. Actually, I am going to get rid of this because it's just, despite my charts being incredibly messy anyway, it's frustrating. Anyway, point is, updated it to this new channel because this accommodates from the breakout. So this was our sort of big falling resistance coming down here, which provided the big breakout, back test, boom, boom, on its way. From that low there, we got 1, 2, 3, and now we got 4 touches here, still with 2 touches on the top side. So what does it do? It sort of gives us, should we get a break higher, a target of where we could expect the sellers to be, of where we could see some profit taking, should we get US dollar breakout strength to come up here. And if you look at this pullback through here, this is sort of a couple of takeaways with this is one, it's burnt off that whole overbought status. So now we're back into oversold and it's starting to tip up here a little bit more. To me, this is the breakout level. I mean, there's a couple of breakout levels, but the first one that we kind of really want to see it above because it held a lot on the way down here is 99.74. You get above that, and I think, put a little light on that. You get above that, and I think we target that gap that we left open a couple of weeks ago. And this is what I say: if they don't close that gap in the first, like either straight away or euro of that day, you've generally got about 2 weeks for it to open. We saw this gap still remain open, so you got to keep this in the back of your mind because this will get filled at some stage. It could be because it's sort of like run away from this now, and I don't actually have any sort of stats or any sort of direct sort of feeling on if a gap stays open for X amount of time, well, then it's going to be open forever or whatever. It won't be open forever. We had a gap at the top, which took, I think, 9 months to close, going back, I think, last year. Could have been the year before, I don't know. But point being is sort of this is kind of, you got two gaps. You got a little one here, you got a bigger one here. Tried to close this one, unable to do. It certainly came back to it, tried to, but buyers stepped in. And what does that mean? Okay, it means that sort of buyers are just like going, look, this thing's going higher. I'm going to buy it anyway. I'm not going to wait for this technical level. And this is what we saw. Bang, and it breaks out to the top side here. So certainly it's got momentum on its side. 99.74 is the short-term confirmation for me. I think that once you do that, you've got at least a close of the gap as your first target, and that'll be your then breakout target to see if we do go higher. If we do go higher, well, we can kind of look where would the sort of sellers be, given this being the channel. Well, probably up around sort of 101 even, depending, of course, the speed in which these things go. Oh, 1 second. All right, I'm back. So yeah, look, I think at the moment we probably still have some sort of US dollar strength coming in here. This is what I've always sort of, what I always have, what I always do say. You've got the three legs. It's important to know what leg you're in. You move up, find resistance, back, find support. Support generally comes in. This is why I sort of it threw off a little bit because support generally comes back in, and the market did, excuse me, try to hold it at previous resistance for support. It's obviously come down a little bit deeper. But this is the leg we're in here now. And certainly this could be considered enough of it because it's broken through this little 4-hour pullback resistance coming through here. So this could be enough to go, okay, that's it. That's your lower high. Oops. That's your fail. Bang, lower high, and dollar's coming back down, comes back down a little bit lower. I don't think that's the case, personally. Could be, obviously sort of like with all these bits of data and that sort of just flicking out from whenever, whatever. If you get a real shocking NFP, then most likely the reaction we can expect from the market is for them to sell off the dollar. But to me, I think this has probably got to come a little bit higher just for a nice sort of little structural play. And even if it's going to sort of fail, if it goes to here and then fails, then you got your lower high, and then you can put your focus back on these lows down over here, the 99 level, and that would give you change of trend and US dollar weakness. But again, just something else to consider with this as well is that this whole pullback here, albeit sort of like, 9 days straight of sell down, still only didn't even come to the 38% retracement from the bounce lows. So 38% retracement is a bullish pullback because you think about it, sort of the markets are going, buy it here, buy it here, buy it here, buy it here. I'm not waiting for it. I mean, this is a great sort of risk reward value play should these things come back down to 61% or so. But the fact that people go, okay, well, I'll buy it and I'll buy it before it even retraces 38%. Well, why would you be doing that? You'd be doing that because you think it's going to go up over here. Like, that's why you'd be like, it's just like, I could buy it today or I could buy it in a week and buy it in a week back down here. But what happens if in a week it's up over here? Well, okay, I better buy it today. And that's what's happening. That's the psychology behind these sort of fib retracements. It doesn't guarantee breakout and continuation. It's just in that one particular use of that technical setup, that is your pullback level is considered continuation of strength. And all that sort of rabbiting on, 99.74 is the level that we want to see it take out. And then I reckon we could see a little bit more US dollar strength coming in with that. So have a look at gold. Gold, actually, I just dragged out a new line before. Well, actually, not a new line, but this was the little rising support that we had, which led to that big breakout a week ago. 90, I get stuck on these things. 4,030 was our sort of big breakout level. As you can see, bang, bang, boom, blew up through here. Massive sell down, found support there, broke through underneath. Okay, this little support, I'm not a big fan of this kind of stuff in structure generally, but I was looking on it in a daily, and you can see that this, as a daily, does actually hold pretty well, almost to the point, which, if you apply it with this, gives us two things. One, could lead to triangle consolidation, which is actually technically bullish because you look at the direction in which you came into the consolidation. So bullish into it, consolidation, bullish breakout. Downside, it gives us, if this is to be a channel, gives us our break level to then see this thing come and move down to probably to basically to this lower trend line down here, depending on speed of this thing coming down here around sort of sub 38. Now, it's obviously still incredibly bullish if you really sort of stand back and go, okay, yep, there's there. But it is not beyond reason, I don't believe, that you could get this break and sort of move down here. And if we see dollar strength into the end of the year, I would assume that most likely we probably will see metals come off a little bit more. Now, again, you got to consider both sides of the things. If the dollar fails, and I'll get to GSR because as well in a second, the gold silver ratio, because I think that obviously as well plays a sort of pretty significant part. If that fails, if dollar fails, well, then you go to this consolidation with potential breakout sooner rather than later. Now, structurally, that could work. I did sort of put up a post the other day and I shorted this part here very hard. I actually shorted both of these very well, but I shorted this part here very well the other day. And that's because this setup here doesn't make sense necessarily to just go and then shoot up like this. But now you've pulled back, the argument is it puts a bit more of a question mark over it. Because minimum for a downside, you could see another move up over to 4160s. And then maybe a move back down over here. If you get back up over here, obviously the thought is then a move up over there. So I do think this is going to be the line that gives us our direction into end of the year. And obviously at the moment it's sort of flirting around the bottom here. This is on the daily. RSI doesn't look like it's fully set to sort of move up. Even if this is to move up a little bit higher here, I would expect probably a body fill down here, 4043. And then once if we see, okay, put it this way, if we see 4043, so body fill on this little pullback down here, probably a little bit of an overshoot, 430 test. If you see that get hit, then, and this is the conditions I'm looking for, if you see that get hit, then you take out the highs, well, this little resistance here at 4083, to me, that means you're springboarding up over here. Not often do you get these sort of bounces with just 2 wicks here and then it runs up over here. Look, anything's possible. Everything's possible. But structurally, I would expect it to sort of hit this level down here, minimum, 4044 between 4043. And if we see that get hit, plus then the buyers step in and take it above 84, that's when I reckon we sort of start to see things move up towards the top end of this, what would be consolidation triangle. But I don't think this is going to be sort of just straight up here. I think minimum we've got a little bit of a push down over here. And honestly, I think this is really just here we go, suck in some longs, stops under here, feed the beast, move down under here. So they're your two levels that I want to see it break under actually. Underneath that falling resistance and then underneath this. I think if we go underneath 39.30, I'd say pretty much watch out. Because I would say that's a lower high, that's a swing low, and that's when we're going down to price target. And price target with this, keep in mind, is also the trend through the whole year. So this is December 24, August 25, maybe December 25. Should it come down here? So it still remains as being ultimately very bullish. Get rid of that. But it does mean that you could shake out some longs, drag in some shorts, and then feed the potential measured move of this being a large flag up to 4,700 in 2026. And look, at this could come early 2026. I don't know. I don't do time levels. I do price levels. So we'll see how we go with it all. But yeah, look, that's the broader kind of view. Short term, that's what I'm looking for. I'm looking for a move down to at least between 44 and 30. If you see buyers step in there and then take out 88, then I would say okay, we're probably going a little bit higher with that one there. All right, on to silver. Silver, double top potentials here. Again, same sort of thing. It's pulled back here. Got a nice short through here. Actually closed my shorts on my silver. Still got some gold shorts, but still got sorry, got rid of my silver shorts. Still got gold shorts. You again, same sort of thing. Underside of the trend, strong rejection down here. Um, Question is this going to come up and have another little shot here? Now, people could argue the cup and handle. Technically, with the cup and handle, 50% of the retracement is the fail line for it. So if we drag this up here, not including the wicks, because that's kind of the base. Like if this was a cup, there's your base there. Disregard the wicks. I mean, if you use that down to there, well, it held 50, but for a measured move, I wouldn't use the wicks. So for the base, I'm not going to use the wicks either. It is still trying to hold that 50. It's actually held the 61% retracement of that sort of second drive up over there. And this is the thing, RSI is not looking like it's ready to really pop up. A shoot down here, if we find it holds around this 50 and then takes out 51.20, then you could see a bit of a move up. And you probably look for maybe the body fill over here, 52.30s. That's kind of how I would play this. I'm not keen to sort of buy this thing because I don't think it's necessarily coming up over here. But should those conditions be met, down, buy, step in again, push up, take out highs, then I'd probably be a little bit more inclined to see if we could get a little bit of a push up to the highs over here and sort of see how high this thing wants to run. Remember, again, it's still ultimately very bullish, but it's just, you're in a double top potential here. And this whole setup here, pulling back here and finding support, could just be sort of getting people to move their stops from here, stops from here, stops from here, which then could feed this thing to go bang, bang, bang down. Keeping in mind, if this double top plays out, measure move is 39.50 odd. So it does have a little bit of downside potential there. Just on metals with this here as well, where is gold silver ratio? This is why I'm sort of like considering things because have a look at this. This on a daily. This is a long term support. This one here. So let's drag it even right out on a weekly. So this is a weekly support, right? So it's 14-year support from 2011. If we get back onto the daily, you can see got very close to it the other day, springboarded back up. Very close, a couple of weeks ago or whatever, springboarded back up. So look, you know that the market is to a certain extent probably paying attention to this. Should this thing break, then yeah, you're probably going to see that next run in metals. What I do think, particularly if you just look at this right now, to me it's almost like a double bottom-ish. You've got RSI to support a move. Have a look on the 4-hour. It's just consolidating the bounce highs underneath the resistance. So when things sort of consolidate underneath the resistance, generally that's a fairly bullish indication that it's going to break out. So should this thing break out and break a little bit higher, then I'm looking at those horizontals. Just on this, I actually deleted this before, but I thought, look, I'll keep it on here. This big line through here, at one stage I had through here, because you had 1, 2, 3 touches like that. Seemed reasonable. 4 touches coming reasonable. Chopped through it. Didn't really do anything with it. Extended it out. Chopped through it. Didn't really do anything with it. You could extend it out here, but it's only got 2 touches, so I'm not really keen on that. And even it doesn't even really provide a channel or anything. So to me, it's not that these things aren't valid. It's just more that I don't think the market's really taking any notice of it because if you were to use these things, and this is the point, it's sort of like, this is why, you need multiple sources of your technical analysis. It's reacted 3 times hit, but at this point, did the market react to it? No. moved it out. Did the market react to it? No. Well, what's the point of it? It's not telling you anything. Whereas sort of like these kind of levels here, we could see it hit it, sell down, hit it. Well, actually, this one started, but hit it, sold down, hit it, and it's rejecting. So to me, if we get a push up here, so consolidating underneath resistance, we've got a confluence here because we've got a horizontal, we've got a falling resistance. So there's a reason from a technical standpoint for the market to sell down here, which it did, but it hasn't sold off. Now, it's not to say that it can't. Certainly, that's why I've got this alert underneath here. Certainly, I think if it gives up 79.50 odd, then yeah, I think we could see this move down. We could see metals move back up. That's the conditions for that. Should this thing move up out the top over here, RSI doesn't look particularly happy with it on a 4 hour, so maybe a little bit more consolidation is in order, if not a little test of the lows. But should this thing, once whatever the RSI wants to sort itself out with, turn up from here, because remember, this is kind of where it is here as well. RSI is pulling back here and then it turns up. So it can get these pullbacks, this pullback here, pull back here, and then turn up and go higher. So anyway, should this break above 81.30s, that to me will take it out of this channel. We had a little bit of an overshoot down here. Take it out of this channel, and then we're looking for 83.60. That little horizontal up over here. So that's kind of the trade that I'm looking for. Should we see that? Then I think we see a test of the lows on metals. Should it go higher? Should this actually turn out to be a double bottom? Should this thing turn out to be a double bottom, from here to here, not using the wicks, this just seems to be the best way to do it, or for myself anyway. Put that here, put that here. That gives you a measure move back up into another zone that we had, which was actually, at the time, this carried on. This was like 3 months or something. It's December. Yeah, it's December through April. That massive consolidation we had before we blew out to the top side. So it's just something to keep in mind that sort of like certainly, there's work to be done, but considering both sides of things, if we break above and out of this channel, well, you're going to be targeting 83.60s and then confirmation above 86. Above 86, measure move takes you to 91.40. What happens to the metals market when that happens? Well, most likely we see those lower levels and those lower targets that I said before play out. So should we get the breakout? It all starts with this small little breakout here. You've got other little hurdles to jump over, but that could be the potential of what we're sort of seeing here, a double bottom setting up, moving through there. It needs to get above this. At the moment, it's still in the channel, so could still break to the bottom side there as well. Fly through these ones. Copper is filling out this little head and shoulders pretty well. This is the one that so we drew out and said, look, this could potentially be the move here. Measure move of this, again, not using the wicks with this one, would take us back down towards price target 470. So I think underneath 494, I think that will open the door and we could see a pretty quick little move down to price target down over there, little head and shoulders setting up. And finally, with the yuan, look, it's again sort of held this lows down here. Big gap up on Monday, was that? Big gap up, sold straight into, bang, that's okay. Obviously overcame that and moved up to the top side there. So let's put it back on something. So 4 hour here, we're still in consolidation, realistically. You've come off support, you got a couple of different touches over here, but you're still in consolidation. So look, there's not really a great deal to say. We're on weekly supports. We are technically on the bottom side of this rising support. All this gets negated above 715. I've been touting that 715 for ages. It came up and tested it, and then obviously bang, got hammered down again. But how long have we been in this thing for? I was like, I thought we were on the daylight. It's been a year, So on this, 66, so 2 months. which, we've seen these things happen before. Consolidation. We saw these. I remember this happening at the time. This felt like, was it this era? Where is this one? I can't even remember. But yeah, so look, it is a grinder. It is sort of holding a lot down here. Um, yeah, you can't say one way or the other. You got mixed technicals with this stuff. You got a falling resistance here, retest topside, but hasn't really sparked any massive rally off this. But it is holding this horizontal for now. Certainly, I think outside this box will give us our direction of what we can see coming into the end of the year. All right, that's it from me.